So you're trying to buy a new home, but you don't have any income coming in, but you have a lot in the asset category. So how can you turn those assets into a mortgage? Well, we're going to talk about that option next with Bill at Cross Country Mortgage. Welcome into the Smart Mortgage Show. I'm Ben George with Bill Litton at Cross Country Mortgage. Bill, got a kind of a different product to talk about today and kind of explain to people that is a little bit more unique. How often does this situation come around where somebody comes in that doesn't really have much of an income coming in, but they have pretty significant amount of assets?
You know what, Ben? It happens more often than you would think. And part of the reason for that is, number one, a lot of times people retire before they buy their final house or their retirement house. So now they don't have that, income, the monthly income from their employment, and they're trying to qualify for a mortgage. So that's where we see this happen a lot. Another situation where we see it happen a lot is just, people who they have substantial liquid funds, whether it be, checking, savings, stocks, bonds, IRAs, 401ks, substantial money in investment accounts, or even money markets, or checking and savings, but they don't have a job or they don't have verifiable monthly income. And these people are a really good credit risk. So, we with some of the other products that we talked about moving away from strictly looking at a tax return, which is the traditional way, either a tax return or W-2s or pay stubs, moving away from those items and looking at other documents that also help us to understand somebody's ability to pay back the mortgage.
Yeah, and this can be very beneficial for someone that maybe doesn't feel like they'll be able to qualify because of that lack of income for whatever the situation might be, Bill. So I know this is called asset utilization lending. So explain how this works and some things you have to kind of be aware of for this option.
Yeah, so just because the traditional ways, the pay stubs, the W-2s, the tax returns, just because those don't, show the ability to repay a loan, that does not mean somebody cannot repay a loan. So easy example is if somebody has $10 million in the bank, but they don't have verifiable income and they borrow $100,000. Well, there was a period of time, Ben, when that person could not get a loan. And there might be good reason as to why they didn't want to pay cash. Their financial strategy might make a lot of sense to borrow those funds. So what we've done is we've figured out a way to say, they've got 10 million in the bank and they want to borrow $100,000. We know they can pay it back. How do we express that in a way that makes sense? So one of the ways is that you could take that, in this case, $10 million. And I gave a kind of like a almost ridiculous example just to show that, some of these folks without monthly income should absolutely be able to pay back that loan. But if you took the $10 million and you divided 10 million by 120 months, okay? So just to say, this person, if they were to spend, $83,000 a month, they could go on that way for 10 years, which, by the way, is longer than the average life of a loan. That gives them $83,000 a month in the income category. You could plug that number in and use that as income. And now you develop a debt ratio, right? So you're kind of like almost amortizing the $10 million in assets over a period of time to develop an income number, put that against the debts, develop a debt ratio. And now it's very reasonable to say that this person could absolutely afford to pay back that loan.
Yeah, that's a pretty cool option, I think, for a lot of people that have those assets and have that money but don't have that income coming in. Is there anything else you got to do to get qualified, Bill? I mean, is it something where if I've got a certain amount in the bank, then I should be good to go?
Great question, Ben. You still need to have decent credit. If your credit is in the 500s, this product is not a subprime lending product, because back before 2008, this same person could have had a 520 credit score, and that will not work with this type of a loan. So you also need to put some money down. So you can't do a zero down loan. You could do 10% down. The rates are higher with 10% down. You're better off putting down 20%. If you can put 20% down, that's great. Now, for the person that doesn't have 10 million, maybe it's somebody who's got 500,000 in the bank. Whatever money they put down is deducted from the number that we use to make that calculation. So if you're putting $100,000 down and you had 500,000 liquid, now we're going to do that calculation with 400,000. And Ben, you wouldn't believe how often these numbers come really close to the qualifying limits, which means there's been a lot of thought that's gone into this. And that person who wants to spend $500,000 on a house from a purchase price standpoint, we don't want to put them in a bad position where they're not going to be able to make the payments. There's not enough liquid funds there to live out the life of this loan. So you can tell there's been a lot of thought that's gone into these thresholds and these calculations, because a lot of times they are close to the limit. And again, down money, credit score, it's not just, hey, we've got $1 million in the bank. There are other factors. Okay,
so that's good to know. How do you have to prove a certain amount of time that you've had these assets, Bill? If I got a gift for, $500,000 tomorrow, could I come in and start discussing this, or do you have to show that those records for a certain amount of time?
So great question. So some of the products you're going to find, they require 6 months proof that they've been in your bank account for 6 months. So in that case, if you got a gift a month ago, those funds get disqualified. Some of them also show requirements where they have to have been in there for 12 months. Now, you can actually qualify with as little as 2 months with certain programs. Believe it or not, Fannie Mae and Freddie Mac have options that you can use where you only need to show 2 months qualifications. You get the very best interest rate. There is no penalty for this type of lending with certain products. Other products, you might get hit on the interest rate a little bit, but these adjustments to the interest rate for these types of products are not egregious. They're not dramatic. So you can still get really reasonable financing with these types of products. But to your point, we are going to do a look back. We do want to know where the money came from. And if it came from a source that's not eligible, it's going to make it difficult to qualify for these types of products.
All right, very good. And this is what Cross Country Mortgage can do. If you have questions, you come in, explain kind of your situation. I know that when you text the word lend to 21,000, you set up a time to meet with Cross Country Mortgage. But these are the kind of conversations you have, right? For somebody that comes in and says, hey, here's what I'm trying to accomplish. Here's my situation. What's the best way to get there?
Yeah, it always starts out with the easiest, best way. Let's look at your tax returns. And then from there, if that's not an issue, we go down our decision tree. Maybe it's a bank statements loan. Maybe it's DSCR. Maybe it's this asset type lending. This asset type lending, we've been doing it for a long time. We're really good at finding the best solutions. So what I would say is don't prejudge your scenario. Let us take a look at it. You never know what we might find. We are problem solvers and we're oriented towards figuring out these types of puzzles. So don't hesitate to bring them our way. We'd be happy to look at them for you.
All right, very good. Again, text the word lend to 21,000 and begin that conversation. You'll find everything else online at smartmortgageshow.com. That'll do it for us. Hopefully this gives you a little more information on the asset utilization lending and how it works. Maybe it'll work for you, but either way, get in touch with Cross Country if you have questions. Bill, we'll talk again soon.
Thanks so much.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.